Hello, in this second of my series of managing risk videos, I'm going to be looking at 8 areas of risk that you should be aware of. Now, this is just 8. When I was actually typing this off, there was others that kept on coming to mind. I thought I've got to limit at some point, so 8 areas will do for now, but I look forward to your comments below. Okay, just a thought. You cannot avoid risk. You can only be aware of it and manage it the best you can. Now, as soon as I've said that, you'll think, oh, well, yeah, but I can stay in cash. Well, you're not avoiding risk because your money's still deteriorating by the level of inflation that's going through. So you're not actually avoiding risk. You're reducing risk and you're going for the safe option. So, yes, you've reduced it, you're not avoiding it. And it's important to understand whether you're actually avoiding something or whether you're actually reducing it and managing it. The most important thing is to manage what you can as best you can. So firstly, what can be risk? What can be we put down? Of course, the amount of money that you're willing to lose on any trade. Now, I didn't put how much we're willing to try and make because the risk is the amount that we're willing to lose. Now, the important factor here is, I talk about this 1-2% risk if you're trading for the longer term. If you're just going out and buying a stock and someone's told you to go and buy a stock and you put 50 quid into it or 100 quid into it or 1,000 quid into it, if that's a small amount of your money, I understand that sort of thing happens. But if you're a regular trader and you're looking at the markets, you want to be managing your risk. You want to be there for the long term. It's not just a punt, it's a trade which you're going to understand the risk of the trade. So you've got to understand what you're willing to lose on any trade and calculate it as a percentage of your account. This is a point that often gets overlooked, is the volatility of your asset class. Now, I say asset class, but it may be volatility of your specific currency, whatever you're looking at. I mean, Bitcoin gets a lot of people excited. There's a risk in itself, and I have listed on the 8 risks here. The risk of excitement or the risk of fear. I've left both of those off, but the volatility of your asset class or your currency, whatever you're trading, your stock, is an important factor. People go often for currencies or stocks that have got a lot of movement in them, but that in itself is risk. And the bigger the volatility, the bigger the risk. Economic news. It never stops, never fails to amaze me when someone will come into a trading room and say, "What caused that then?" Now, I will ask that same question, but not about economic news. I very rarely miss a piece of economic news. Might miss a speaker from time to time, but not the key risk factors. I check them every morning, I check them through the day and keep reminding myself of what's coming up. So economic news, it's a risk. Non-farm payrolls on Friday. Do you trade on Friday morning? It's a risk. It's a bigger risk trading on Friday morning arguably than trading after the news or not trading at all. So economic news is an element of risk and a big risk at times. In fact, I'll go back there, watch and look at the impact of the particular news that you're looking at that's coming out. If it's low impact news, house sales and things like this, it's relatively at the moment low impact news. I wouldn't be too fussed by it. If it's non-farm payrolls, FOMC meeting, I'm fussed by it, and it's a much bigger. So even you can look at risk and look at the impact of economic news and see that different grades of, and it's not just on currencies. That's the equity markets that can affect everything. Sector risk. There's often again it's overlooked by understanding the sector that you're trading in, particularly in stocks. If you're trading a sector which is likely to get impacted by some news, but by some results coming out from companies, look at the sector risk. And also some sectors, some tech sectors are much more risky than others. There's the boring ones, which just make some money, or there's the exciting ones. I say that word again, where there's lots of money potentially to be made and lost. But sector risk, rebalancing. Now, this is a thing that funds do at different times of the year, the end of the month, maybe the end of the quarter. They're rebalancing. Be aware of what's actually going in the market itself. It's a risk not understanding what the market's actually doing. It's a risk not understanding these elements. That's the biggest risk. Expiries. Now I put expiry. I'm talking about options. Now we've got currency options. They expire on a daily basis. There's some currency options out there that trade and expire and can affect the price action. There's the end of month or third Friday of the month expiries on stocks, US stocks. There's other expiries. If you're trading in those worlds where there's stocks underpinning it, you need to really understand where I am likely. If you get into a triple witching where you've got expiry of contracts, commodity contracts, you've got everything all happening at one go, there's a risk in itself. So expiries. Leverage. Now I'm referring to your leverage potentially here. Everyone liked the old-fashioned on currencies, the 100 to 1, etc. It was reduced, but leverage itself is a risk, and it may be that you size according to the volatility of the market you're looking at, and look at the potential leverage you're using. You can cut down on leverage if you want. In some places you can increase the leverage you get in. Because I'm a professional trader doesn't mean to say I need to use 100 to 1. I can opt to come to 50 to 1 or less, and the bigger money uses a lot less leverage than we do as retail traders. And then you've got geopolitical news, risk. I scratch my head on this one because I can't say, well, you know when this is going to come out, because I sat in a perfectly good trade today, short on the pound dollar. Everything was lining up technically. There was no news due out from an economic point of view, and boom, there is some news regarding the Ukraine-Russian situation in terms of a possible getting close to reaching an agreement for ceasefire, etc. That in itself, could I have managed it? Well, yeah, I could not be trading at the moment. I could decide on that. I can reduce the size of my trades, so I can reduce the risk in because I know it's happening. It's not a shock that it's happening, and there's at times that we may try and take advantage of it, but you don't know ever the outcome. And as much as the euro flew up earlier, the euro could just as easily fly back south again on a disagreement. And it's a risk, and it's a massive risk at the moment. We used to have the risk in the name of Trump. Often you never knew when it was going to happen, but it's a risk. If you can understand, in the case of Trump, understand what he's doing, then you've got a better chance of catching it in those days. But realistically, it's a risk, and as much as you're aware of the market, the less your risk will be to you. So there we go. That's the levels, different levels of risk and types of risk that you should be aware of. Which of these can you manage? Arguably nearly all of them, and I say nearly all. I think the geopolitical one, having been caught out on it today, of course, making my own excuses, but even then I could have done something slightly different, as I said, but you could probably end up not trading at all if you relied on political news. There's not a lot you can do about that. You can catch speakers from the FOMC, but then that's economic news, and you should be looking for the speaker list. And I've actually added a new news service, so I would try and don't miss even the extra speakers that might just be coming out there. Okay, I hope you find this session useful. If you do, please give me a thumbs up, like the video, subscribe to my channel. It'd be much appreciated. I am building it. It's a new channel, relatively. So everyone that's a subscriber is much appreciated, and you will catch the rest of the series of these managing risk videos. Take care. Bye for now.